you people hearing me? Or I am alone here?
Yes, sir. You're welcome, sir.
Thank you,
We can
Sissy.
hear you very well.
Thank you very much. Do you have a burning question? Now that you've responded, or you have none? Blackwood PSP straight out of Mackinley. Thank you so much. Thank you so much for responding. All right. Today we are going to just be revising something very, very simple. And like I said, my screen is off. Okay. Like I said yesterday, we're going to be looking at trade settings once again. So I want you to put your questions about trade settings in the comment section, or you can unmute your mic and let me know in that area. So we're going to be revising that. Trying to get my computer connected here. It's playing me Quiso Bando. So I think I'm going to have to leave it for now. So I think let's go ahead. Let me look at the chart here. Things are not really that bad on the chart. Usually I love to check on the chart to see an update, and I can see one of my trades was triggered last night, and that is Ethereum. I'm expecting a good move, at least from here to there. That's around 4%. My first take profit at $4,600. That wouldn't be bad. So this is basically to go and tell you that yesterday's news went not that bad. So it really didn't shock the market. The market remained bullish. We can see what happened on BTC. BTC reclaimed $115,000, as we can all see very well. On my chart, I got a confirmation of BTC's change in character right there, and we can see BTC reclaimed that area, and a trade on BTC got me a good 2%. I think I'm out by now. I took a small scalp on BTC, which got us to around 2% as I wait and see where the market is headed. So as we head into the weekend, the news yesterday gave us some positive outlook onto the market, and we can expect to make some money over the weekend. Yep. The market is green on my dash here. We can see things are moving right. Injective really hit my TP. Hasn't hit my TP yet. Okay, still waiting. I thought it had. Yeah, but this goes to tell you that most of the trades are going to be paying out, given the general outlook of the market. So no excuse for you not to make money. Absolutely no excuse. Should be making some money even through and into this weekend. I'm expecting this weekend to look pretty much like previous weekend. We might get some recovery in the market over the weekend, where we could see the market really pump high, and Monday coming in with even bigger pumps. So why am I sharing this? This should be some of the information that you go through to gauge how you expose yourself into the market, how much risk you take on, whether you're going to be, a bit tight on risk or a bit much more relaxed on your risk. So when we talk about risk, we basically talk about three things. Some of the things that I've gotten to learn with Royal Q is one, when you are doing risk, there is overexposure, and then there is let's do the numbers here. There's overexposure, and I'm going to try and define these in the very, very simplest terms possible. And then there is reserved exposure, and there is conservative. Okay, so I think some of us who have used RoyalQ are used to the risk profiles or the risk types that RoyalQ has. So RoyalQ is programmed to have risk types. Yeah. However, RoyalQ's risk types go for the names that we know here. We have, give me those examples, guys. The examples of the risk types.
We have steady,
Okay.
conservative, radical,
Radical and conservative.
and conservative.
Okay, so we have radical, we have steady, and then we have conservative. Okay, now when we are talking of risk, when we are trading cryptocurrencies or any general trading, anything that you're going to trade in the financial markets, you need to understand the concept of risk management. It is really, really, really important that you understand the risk management. Now, if you do not, you're going to be in and out of risk without ever understanding whether you really took on how much risk you're going to be taking trades and profits, but you will not be able to gauge and have control over risk, because risk is one thing that you need to understand if you're going to trade cryptocurrencies. Yesterday, I think I was looking at something, and I want to share that here. Give me a minute. Let me get the pic. I want to share that here so that we can see some of the things that we miss out when we are interacting with crypto. And they're very, very important things. Let me just get that screenshot. Okay, I think here it is. Yep. Here we go. All right. So, speaking of risk, yesterday I was talking about. I think I was doing something, and then someone took a screenshot. I think they had an issue with their authenticator, but then I remembered this part here. I don't know whether you can see it. This part here comes when you are signing up on Binance, and this warning goes and it reads, "Don't invest unless you're prepared to lose all the money you invest. This is a high-risk investment, and you should not expect to be protected if something goes wrong." Take 2 minutes to learn more. So you realize that Binance gives you risk warnings, especially when you're starting up the account, when you're opening it up, or if you've taken a long time in the account. It is going to give you all these notes to let you know that and remind you how high risk the investment that you chose to do is. They actually tell you not to invest if you're not prepared to lose all the money you invest. This is a high risk investment, and you should not expect to be protected if something goes wrong. Basically, what they mean as Binance is that in case you lose the money, don't go crying to Binance that, "Hey Binance, I lost my money. I invested in a coin like this and this and this, and then I don't have any more money in the account. Or maybe I traded like this and this and this, and then my money is gone." So Binance is not expected to take on the responsibility of your own money, but also they take the charge to remind you of how high risk investment crypto trading can really, really, really get. So it is important to acknowledge that when we trade cryptos, we are trading a risky game. Yeah, we are playing a very risky game, not just small, but a high risk venture. So it is important that traders understand the risk that is involved in trading and also have a higher hand on the control of how you manage this risk. Okay, so let me just if we go over Royal Q, Royal Q is going to give us risk types. At least it's going to give us risk types. So according to Royal Q and how they gauge risk, as you can see here, and how they gauge risk, they put their radical. And if we go for Royal Q settings, radical to the limitation of Royal Q, radical is basically a percentage drawdown. Yeah, radical is just a percentage drawdown. And if I may go in the Royal Q here, and I go to my strategy settings, and let's say I choose radical here, right? So when I choose radical, according to Royal Q, margin configuration, when I come to margin configuration, this is basically what changed, the margin call drop, right? And when I choose conservative, basically what changes is the margin configuration call drop that you're seeing here. We are first going to understand what it is according to Royal Q and how you can modify or switch risk and when do you need to. So let us first find out. Okay, this is 4 times 4. 1, 2, 3, 4. That is 4 times 4. That is around 16. This is 20 plus 6. That is that's 20. 4 times 4. Yeah, that's 16. This is 6. This is 22. Plus 5. That is 22 plus 5. That would be
27.
Plus 3.5. That is around 30.5, right? So the first margin call drop in radical is 30.5. Okay, that is a 30.5 call drop from your initial entry. And when we go to conservative, which is basically right here, margin configuration, we are going to have a 4, 5, 5.5, 6, 10, 15, 18. Okay, I'll just add those up. So that is 18 plus 15 plus 10, plus 10 plus 6 plus 5.5, 6 plus 5.5 plus 5 plus 4, 5 plus 4. So we see the one that is steady is basically pushing us all the way through to 63.5 as the total call drop. I hope I got that right. 10, 15, 10, 10, 15, 10, 10, 15. Oh, 18, 15, 10. Okay, 18, 15, 10, 6, 5, 6, 5, 5, 4. Yeah, I got that right. So that is a 63.5. And Royal Q takes that as conservative. And then there is steady. When we go for steady, it has a different call drop percentage. Here we see 12, 10, 8, 5.2, 12 plus 10 plus 8 plus 5.2 plus 10, 8, 5.2, 4.5, 4 plus 4, okay, plus 4.5 plus 4, plus 3.5, 3.5. So that's around 47.2. So we see Royal Q is gauging risk and assessing risk as per percentage call drops in the market. What is this meant to do? It is meant to be there in case the market really went against you and you entered a certain trade. This is as much as the bot is going to protect you against the market drop. You get it? When we set the margin call drop, we are basically setting how far we want our capital to protect the trade that we are in against the market and unpredicted downturn. You get it? Now, this is what makes Royal Q one of the best trading bots, because it is inbuilt in Royal Q to manage risk in this kind of manner. You get it? is inbuilt in order to manage risk in this kind of an. And if you can embrace how it really, really manages risk, you're going to be able to get probably some very good and consistent results in terms of risk management, but also profitability using ROIC. Now, I will not go to the part of buying ratio, but we all understand this is basically the martingale style, where you double each and every entry, right? And it goes all the way to 7 margin calls. So, according to ROIQ, Radical is basically protecting yourself against the market downturn by 30.5%. That is to mean when the market opens up, when you open a trade, and if it goes into drawdown or it goes negatively against you, the bot is going to protect you in a radical way. It's going to protect you by 30.5%. In a conservative way, it will protect you all the way to double this amount. So that is 63.5%. And then what they call steady is basically 47.2%. So these are ways to really approach risk. You get it? Those are just ways to approach risk. Radical being the minimal amount. Let me just write it here. We saw it is 30.5. We saw this being 47.2. 47.2. And then we saw this being 63.5. Yeah, 63.5 call drop or percentage call drop. So in simple terms, ROIQ is giving you a fundamental or a starting area of how to manage your risk. You remember when I told you about overexposure, reserved and conservative exposure into the market. Now, when we talk of exposure into the market, we are talking about how we're exposing our capital into the market. And because usually when we expose our capital to the market, we are basically looking for profit. Now, some of us may not understand that sometimes when we expose our capital, we are doing an overexposure. Now, when we talk about risk management, overexposure is one of the areas you don't want to be in. Overexposure is whereby I have an account, but I trade with a size that is not equivalent to the account that I have. What do I mean by that? What I mean is I have a $200 account, right? But then when I enter a trade, I trade with a size that is way too bigger than my account. You get it? I trade, for example, with my $200 account. Let's say I trade with $60. Now that is overexposure, right? I trade with $80. That is $100 as my FBA. You get it? Now, if I get into a trade with this much money compared to the account size that I have, what I am doing here is called overexposure. Now, it doesn't mean that when you overexpose your capital, you're going to lose out on trades. Actually, it is the fact that it has an effect of paying you a better amount of money. And that is why certain people never even get to understand and learn that we are doing overexposure, because of the effect of paying out a significant amount of money. Now, let me show you. With $60, if I was taking a 3%, I'm going to get $1.8 as take profit. With $80, if I was taking a 3%, I'll get $2.4 as take profit. With $100, we all know that with a 3%, I'm going to get a profit of $3. Now, our brains are going to interpret this as this is as much as I should be making in the market, because of our dissatisfaction in terms of how much profit you take with the amount of capital that you have. You get it? So our brain is going to tell me I should be making $1, at least with my 200. I should be making above $1 as profit. Next time you'll expose $80 as your first buying amount on a capital amount of $200, and it will give you 2.4, and then you'll be like, this is still too little. I should be making more than what? More than $2. Now, your expectations are not based off of risk management. Your expectations are based off of how you feel. You feel like you should be making more money. You have $200. You should be making more than $2 every trade you take. Now, when you base your risk management off of how you feel and what you desire, then that is one step away from failing in this market. Okay, that's one step away from failing in this market, because with this market you should approach crypto trading with risk management at all times. At all times you should do what? You should approach the market with risk management. Now, that is overexposure. I've demonstrated overexposure. Now let me talk about it from the futures side. Now it gets worse with futures traders, at least recently. With futures traders, overexposure is a big problem, because a lot of futures traders have realized how futures can give you even much more money with very little amounts in terms of what? In terms of capital. So with futures traders, it even gets worse. Why? Because we have the ability to amplify the possible gains that I would get. Now, you see, this one of $60 was probably getting $1.8 in terms of profit. Now, if it was futures trading, we would maybe multiply this by, let's say they went in with 5x. That is going to look like $9. You get it? Now, if they didn't go with 5x, they probably went in with 10x. It is going to be amplified all the way to what? To $18. Now, it's not that I don't want you to make money. When I share this, it's not because I don't want you to make money, but I want you to see some of these things that you do that you probably might have missed out. Now you take the decision because the money is in your account and the boat is in your hands. You take the decision on how you manage or you do not manage your risk. Okay, but what we are saying here with the futures trader, if they're taking 3% on spot, they've been basically getting 1.8. When they go 5x, they're going to go for $9. When they go 10x, that's going to be basically $18, right? So when you are drawn closer to as many profits just by the reason of I am going to make more money, so let me expose my capital, chances are you're going to get into problems. Very, very huge problems. Chances are you're going to float, if we are on spot, for a very long period of time the moment you catch a very bad trade. You get it? The moment you catch a trade that does not do what you expected it to do, you're going to do what? You're going to float abnormally high. Okay? And then for futures, chances are that if this short trade that you wanted to make $18 off of because you have $60 on the account and you can know how to leverage 10 times, chances are if this trade does not go to your side, it is going to accumulate losses in terms of floating loss, and you would have to wait out on that trade. If not so, you're going to have to hit a stop loss, which not very many of us use it. So you'll probably hit a liquidation point. You get it? And every time you're liquidated, it is your money that goes in the market. It is your money, right? So a mistake you make in the futures market, you pay it with money, pay it with dollars. Okay? So overexposure is a mistake in the what? In the market. Now, if you consistently go on overexposing your capital, very likely you're going to use that capital to pay for the mistakes that you're doing what? In the market. And people have been liquidated, but they don't talk. They just remain there, remain silent. You just see someone who was sharing screenshots, no longer shares screenshots. But they literally just got what? They literally just got liquidated. So one of the reasons is our risk management. Overexposure. So reserved exposure is basically whereby we are getting into the market with smaller amounts of money at different entry points. You get it? I am getting into the market smaller amounts of money with different entry points. Conservative is basically when someone really enters with very, very limited amount of money and they wait for the market to do what the market knows how to do best, move in their direction, or maybe trigger their margin calls so that it trickles in very, very limited amounts and maybe gets the position bigger and bigger with time. Okay, so it is important that we understand the effects of overexposure and probably some of the reasons why we have made the mistakes we have made previously. Now, I talked about, you see, yesterday I opened our call with giving us an overview of where the market is standing and what we can expect of the market. Now, when you're trading in crypto, you need to understand the situation or the state of the market at the moment to gauge how much risk you can do what you can enter with in the market. Now, I want you to look at this like, I want you to look at it like you're driving a car which has gears. You get it? When you get on a steep hill, you want to engage the strongest gear. And then when you get on a straight road, you want to engage a fairly strong gear, right? And then when you get on maybe a highway, you want to engage a very light gear, which is going to do what? Which is going to give you much more speed. You get it? Now, as a driver, you're going to be able to control your car according to where you're driving, according to where you are. Now, that is basically the same thing that we do in the market. You get it? We do not just get into the market and we have one setting works all the time. All right? You're going to have advantages and disadvantages of certain types of settings. So you need to understand, where do I apply a bit of exposure into the market and where do I reserve my capital? Why? The number one thing, like I told you, I think a week or 2 weeks ago, the number one thing is that you're going to have to exercise patience and discipline in this market. And risk management is one of the areas where many of us have failed. Absolutely, totally. We have been led by our greed and we want to do what? To just keep making a lot of money. That is not what the market is going to give you. Let me show you something. Look at this chart. Look at this chart. Seriously. Look at this chart. I entered this trade INJ. Let me go on a higher time frame, see if we can get something. I'm sorry, my chart is very dirty. I don't know how you are going to understand the things I'm showing you, but let me get it from another exchange. INJ USDT, let's get it from KuCoin. Great. So I analyzed this token from way back, and very clearly I can see that this was a swing high point. You get it? This area that I have put the green line was a swing high point. Now, I'm a swing trader. For those of you who have gotten to know me and who have noticed my trades, I swing trades. I can see INJ on the higher time frame has formed something very, very impressive. I'm actually seeing this right now. Just doing this analysis right now. As you see, I hadn't gone through this before, but as you can see, we are having 150%, and I am expecting another 150% from there. It should be 9407. Let's try and see. 9. Great. So I'm expecting a good 50%. This is a very good pattern in terms of chart patterns. It's a very good pattern that we can use to try and gauge where the next take profit would be. So on INJ, actually, let me label this out. I'll continue to, okay, I'm expecting a good move around that area. So I'm expecting a breakout. If we have a breakout of this level, I'm expecting a 50-60% rise in price on INJ. Anyway, let's get back to where I wanted us to look at. But yes, if you want to know my take profit area for INJ, as soon as we break above $16, as soon as INJ trades above $16, my take profit next target is $25. So for those of you who know how to swing trades, yeah, that is a very clear, very, very clear take profit on the chart, as you can see. I just looked at it when I opened the trade, and that is simple analysis. But anyway, I want to show you on INJ. We can see INJ did give us a very beautiful head and shoulder, a very beautiful inverted head and shoulders here, right? And then INJ went ahead to give us a good retracement to the shoulder level. If you may look at this here, it gave us a tap on the shoulder level, which is what very many tokens did, by the way, over this period of time. So we see INJ came back, tapped the shoulder level, and I think I must have entered this trade around here. So on my analysis, I did draw a trend line to tell me the exact point at which I should enter this trade. And this trend line is basically going to look like that, around that area. So when the market really went above this trend line, of course, if you use levels like this one, this was a clear level that the market is going to, because this was a previous resistance. You can see the market is resisting from there, resisting from there. So this was a very, very clear resistance. This is basic analysis, and we teach this analysis. I remember in the first weeks, these are some of the things that we looked at: higher time frame analysis and market structure, price action, pure price action. So this is basic pure price action. So I am just going to explain how I took on the INJ trade. So I take on the INJ trade. First of all, it gave us on the daily an inverted head and shoulders. Inverted head and shoulders, the market went into a retracement. You get it? It touched the shoulder level and then it bounced off of that area. But it had strong resistance around this area. So this strong resistance on the daily was basically something that we're going to look at that could turn into support. And we can see INJ came and used this area as support, what we are seeing right there. So for some of you, someone who is interested, I'm expecting INJ, of course, to definitely go and hit that level. That would be a good 9%. So for someone interested, that trade is very, very viable, very, very positive. That is around a 8% that INJ is very, very capable of taking out. Why? Because INJ basically picked up from this area and it is looking at reclaiming these highs that it has been making. So we see we have a resistance area, or what I call the swing high. Okay, this is the swing high of INJ. It has definitely failed to break the swing high so far, but we are seeing that the INJ has been able to tap this area one time, tap this area the second time. Hopefully this time when it goes up, it may be able to trade above the swing high. But for you who is looking for a daily trade, a simple trade to make some money from, you can target this level, and that is around 8%, 9%. Take that out of it and then wait for INJ to close above $16. When INJ closes above $16, my next take profit is 25. My next target in the market is around at 25, at 25, 25%. That is $25 mark. That will be a 60% rise in price of INJ. And if you look closely, INJ is actually having that area here. It is common, yeah. So it's a good take profit target. But there are take profit targets in the middle there. What do I want to show you here? I want to show you risk. In this situation, I want to show you risk. Now, when I was trading this upward move, I had high conviction. The market conditions were positive, and the conviction of the trade was definitely high. Now, when I am doing risk management with this kind of trade, I'm going to be what? I'm going to be probably much more radical in my setting, right? I'm going to be much more radical, and in this sense I'm definitely talking about overexposure. I'm going to be convicted high to expose some bit of capital. Yeah, some bit of capital. Why? Because I definitely saw INJ break above my level here that I am very sure of. This was a previous a resistance area. which definitely turned into a support level. So, and when I get to read about, because if you really took the trade around this area, Ethereum was just basically pumping and making all-time highs. Bitcoin was pumping and making all-time highs. That means that the market was in green. The sentiment was bullish. Greed and fear index, we were in the greed side. Yeah, we were approaching the greed side. Bitcoin was bullish. Ethereum was bullish. And this trade basically was going to give me, now, because of those conditions in the market, I would go in with a much more overexposure. You get it? A high exposure into the market. You get it? I can enter with a little more exposure into the market, and I could take a trade as high as this. Now, this trade was about I think I targeted around 14, yeah, around 20%. We can go and look at it. Okay, maybe later we can go and look at it. But this was a very, very possible trade that was that had the potential to give me a high risk, a high reward. Why? Because I analyzed the market, I learned the market condition, I understood it, but that alone gave me the backing to be able to take on more risk. You get it? Now, when you come back and look at the rise from here to here, which is basically what ING did, right? I repeat, I am a swing trader. I usually swing the market. I love swinging the market. So when you look at this move, the second move, because now ING is ranging within this area, it has failed to break above. So it is basically just ranging with that, within that area. Now, when the market finally returned here, the market had a lot of bearish news and all. Now, this next move that really took us up there was not as of a high conviction as the first move. If you look at the first move, we only have one red candle from this green momentum candle. We only have one red candle, and that is basically market structure. Higher high, higher low, higher high, right? When we look at the next move, we have a red candle here, we have two red candles here before we finally get back to the previous heights. You get it? Now, this move, according to fundamentals, was not a high conviction trade, even though I took it. It wasn't a high conviction trade, because when you go on our lower time frame, you're going to see that the market was basically going up, coming down, going up, coming down. And when we measure how much it is coming down, it is actually coming down a big percentage. That is an 8% drawdown. And then when we come here, we can see this is another 9% drawdown, which is different from the first move here. The first move, our retracements in the market were slight 6% drawdown, and then we see one happening here that is around 7% drawdown, and then we see clear momentum pushing up the market to the initial take profit that I wanted to take. You get it? So in such market conditions, you realize that this is a different trade from this trade, because I took both trades, but this trade was better and a high conviction trade than the trade from here, even though they all left the same starting point and they all went to the same take profit area. So when we are analyzing the market, when we are studying and trying to understand the market, it is important that before we take on higher risk, we understand the conditions in the market. Before we take on a smaller risk, we understand the conditions in the market. Now, this is a kind of trade with a very poor conviction, a low conviction trade, which I could enter using a risk assessment or risk entry, like the one of a reserved exposure. I'm going to call it reserved exposure, because in the earlier trade I did an overexposure. Why? Because I had high conviction. I had a high conviction on that trade. Yeah, high conviction. You get it? And then this one I had neutral. Neutral what? Neutral. I felt neutral about the trade according to the market conditions. Basically when I'm feeling neutral, and then conservative is basically when I am really fearful. Yeah, I don't know what is going to come out of the market. I just want to place the trade and make some little money so that I don't leave the account open. But most of the times you find that I would not trade at all. But because we have to keep making money, this is basically when I I have low convictions on the trade and the market conditions. You get it? Now, you need to be able to gauge these things in the market so that you can adjust how you enter trades and protect your capital better. You get it? And protect your capital better. We're going to come to these risk types in Royal Q maybe in another session where we shall be talking about the bot settings in Royal Q. Maybe my apologies. I am meant to be sharing trade settings in these sessions, but I want you to see where we come from when we make the decisions we make on Royal Q to set different bot settings, and when can you modify, or rather, when can you change your bot settings on which types of trades, because one setting is not going to work all the time. You get it? One setting, one method is not going to work all the time because the market is going to change. The market is going to come when it is extremely bullish, and the market is going to come certain times when it is just neutral. It is just staggering there. It is not decisive. And then times are going to come when the market is really risky to trade. But because you see an entry, you can enter the market, but this time with a smaller amount of money. When we say manage your risk appropriately, manage your risk accordingly on certain trades. I don't know whether you've seen someone give out a trade and then tell you manage your risk accordingly. When we basically talk about manage your risk accordingly, what we mean is go through this and decide to do what? Not to overexpose your capital, but rather to enter the market conservatively. You get it? Now, because the market changes and the market conditions change, you need to also be able to do what? To adjust accordingly. Now, think about the market as a sailor. This is how I love to think about the market. When we go at sea and start to sail, the waves can come and the wind is too high. You're going to respond a different way. You get it? Sometimes you're going to get still waters, and that is going to be safe. Sometimes you're going to get maybe winds that are blowing you off a different direction. All those different types of sea responses should give you an idea on how to sail and get to your destination. You're not going to, even if you're driving, even if it is a car, even if it is a border, even if it is a bike, the same energy you used while trying to go uphill is not the same energy you're going to use when you're going downhill. It's not the same energy you're going to use when you're on a flat surface. Now, I want you to understand those, and I want you to understand that these happen in the market. Because even the market, really, look at the market. The market is not in a straight line. You get it? We see the market made the same move. You get it? From here to here. And then the market returned from here to here. The same move. The same move. But the way it took on the move is different each time it made it. You get it? So why do you think that you should use the same approach and it should work 100% every time? You get it? Now, some of us understand that my approach maybe does not work in certain market conditions, but you do not know what can I do, or how do I modify, how do I adjust my approach in the different market in the different market situations. Like I have told you, this one was a high conviction for me. When I took on this trade, it was a high conviction, and I actually entered with some good amount of exposure into the market. Why? Because this is a pretty much more straight move than this move that came after. You get it? This one, sweet, we are up, right? Now, this is the same move, but this one had, you get it? Internal structure that is really, really going up and down. Okay, if I may draw the path here, you're going to see higher high, higher low, higher high, higher low, and then higher high. Okay, let us give it maybe yellow. Give me yellow. Give me yellow. So, okay, so you see the way this market moved was a little much more smoother, yet this one came staggering, but it was the same trade. It picked up from the same support level, and it went to the same resistance level. I waited for the market, it came back to the same level, it made the same thing, and the market has still returned to the same level. Now, even if you are shorting the market, this was a smoother ride. if you look at this ride, it was smoother. Lower low, lower high. That is one move. Lower low, lower high. That is the second move. Lower low. You get it? So in about 3 waves, the market was done with its move to the downward side. You get it? We are coming from this point, lower low, lower high. That is one move. Lower low, lower high. That is the second move, lower low. You get it? And in as short as that, the market had left the premium area and returned to the discount area. You get it? Now, I want you to look at the second move. Now, this one is a bit much more funnier and trickier, because when the market was coming back this time round, it did not give me the advantage of having such a smooth move. Lower low, lower high. We get here, we can kind of do something like this. We come here, we kind of do something like that. You get it? We come here, we kind of do something like that. Da da da. We are, it's like we don't know what we are doing. You get it? This is it is still the same move. We are leaving this area and we are getting to this area. Still, the same move comes in. We left that area to get back to my what? To my demand area before the market went up again. And we are going to see the market is definitely going to go up again. And it is basically going to reclaim the $15 area. You get it? But because the market conditions change and the market offers differently every other time, so it is important for you as a trader to understand and be able to gauge what are the market conditions that we are in at the moment. And if you feel confident that you can pull this off, you can then start to understand risk management and how to apply risk management in the different market conditions. Now, on this move high, on this upward move, I did not have as high conviction as I had on this one and definitely on this one. Yes? So you will find that I placed this trade, but because even as it came, seriously, look at these trades. Huh? This one went and tapped almost in the middle area here. This one still came and tapped almost in the middle area there. This one, on the other hand, does not. It comes, it plays about, it goes, it is giving me long wicks, as if it is going up, as if it's coming down. It's really not doing anything. So it's not decisive. So this move, even though it has the potential and it can do the same percentages like the previous moves did, that is picking up from my demand area and selling at my supply area, which is basically a 27% move. You get it? I got a good profit out of that 27% move from here to here. I got it again from here to there. You see? I was able to get that smooth 27 movement from here to there. You see? That was a good move. I got another good move on the same asset. When it returned to my demand area, it did another good 27% from there to there. This time round, I am not sure I am going to get it. But according to the market, if you look at it on a general perspective, it is still doing the same thing. It is moving a 27% move. But this time round, the market did not give me the confidence to enter the trade with as high conviction as I did on this one and as I did on this one. So it is important to understand that the market conditions can change. And when they change, as a trader who is learning how to trade and who is mastering their game or their art of trading, you need to be able to know, when do I change my what? My risk approach to the market. Okay? That way, you're going to have higher chances of surviving in this market always. You get it? Why? Because you know when to change your risk approach to the market. You know when to go high in on the market. We said exposure. You know when to expose more and you know when to expose less to protect your account. The number one thing that a trader has to do is protect the capital they have before they go and hunt the capital they don't have. Now, some of you have it the other way around. You hunt the capital you don't have at the expense of the capital that you already have. You hunt the profit that you don't have, and you put a very, very big importance on the profit you don't have, forgetting that you have capital that you're using to trade in the market. For example, you have your $200. It is seated on your account. and you're hunting for $12 as trade profit, and you're risking almost 70% of your account. Yes, 70% of your account of 200 is basically going to look like this. You're risking $140 to gain $14 or even $7 from the market. You get it? Now, some of us forget that we need to actually realize that what we have is money, and we are trying to make more money. So it is important to protect the money that you have before, in your mindset as a trader, because your mindset is important in trading. In your mindset as a trader, you need to be able to protect the amount of money you have, and you should be able to set strategies that protect the amount of money you have, or at least give you a fair valuation and reward before you go for the money you do not have. Now, why am I coming through like this? Because I have talked to tens and tens of people who had 7,000, 3,000, 8,000, 20,000, and they don't have that money anymore. It is either floating in loss, or it is actual realized loss through maybe delisted coins, through maybe burnt futures accounts, things like that, right? And before, by the way, this is what happens. Before you lose that money, you are making a lot of money. Because I usually talk to people and ask them, okay, how did you get there? The truth is that I was making $100, I was making $30, I was making $15, and my profit was consistent. But before you know it, I got into this problem, and then I'm floating 90%. I'm floating off of 3,000, I'm floating 1,500. You get it? And someone, you find another person in futures, they were making 30, 40, 50, 30, 40, 100, $200. And then they probably got a very, very bad, terrible trade on futures, and they are floating almost 300% according to the leverage they used. When you check, they're floating 300%. And then you're like, what do I do with this trade? Do I close it? Do I add more capital? What do I do? And you realize that you would have avoided this situation if you actually regarded the amount of capital you have on your account before you look for the profit that you do not have. So it could be that you're making the money right now, but I want you to understand the risk that you are applying and the possible outcomes of what risk you're playing with. You get it? I think the most recent guy I talked about about futures lost around $700 into the market just by taking what? Risky futures trades. This person was entering with a first buying amount of $137 off of a $500 account. And to be honest, $137 on 10x is a very good amount of money. 137 times 10, you're going to have a size of 1,070. Now, if you're taking a profit of 2%, you're going to take $27. You get it? Now, if you raised it to around 5% take profit, your profit is going to be $68. So someone with $500 would expect that this is normal. I have $500, I'm entering with $137. If I take a profit of $27 or $68, it is going to be a normal trade in futures trading. I want to remind you, my dear traders, especially the new ones, that is abnormal. It is abnormal for you to be making $27, $68 with just a small investment as small as $137. You either have to be experienced and you know what you're doing, or you're gambling and you're just waiting for the time to lose that money. And by the time that time comes, it does not take long. It comes if you do not learn and understand risk management. So what I'm trying to show you here is I'm trying to show you that sometimes some of you may not even know that I am overexposing my capital and opening myself, lowering my defenses and opening myself to the risk of losing money. In the crypto market, the risk is always high. So what do? What we do is we gauge the market. We do exercise things like the ability to gauge the market and to tell how much risk can I use in this market condition, and to tell when not to use a high exposure. Okay, so in the evening I will be talking about bot settings, and we'll start with spot trading, and hopefully if we have enough time we'll go and talk about futures trading. So this is not to beat down any bot settings that you've been doing, but this is to show you risk management and to show you Gwe mwenyini weegagingire. You yourself, you gauge where you stand. Am I an overexposure and I am riding on top of waves of the market? I want you to know that if you find out that you are an overexposure, the results will be inevitable. It is just a matter of time. If you do not change, if you do not understand risk management, the results would be just a matter of time. Okay? And then for those of us who have been maybe underexposing and we are too fearful, you also need to raise some risk in your trading, because with trading here, you will understand that without risk, you're going to be there, Yeah, I mean, you can protect the account all the time, but to make some good amount of money, you should apply some level of risk. The difference is, when do I gauge to apply more risk and when do I gauge to apply lesser risk? Okay, the first part of that is to understand what are they. So some of you might not even know that you are over risking or you are under risking. Okay, all right. With that brief presentation, I want to thank you for your attendance this morning. Hopefully we can meet in the evening and we can continue about risk management. So I see here some messages. I can't see your screen. I don't know what happened. Oh, my Wi-Fi went off. Sorry. I hope you can hear me now. My Wi-Fi went off. I'm on data. I think that is what happened. I'm seeing my old girl. Thank you for joining the winning team. Okay. So I don't think we have any questions. Unless you have some questions. Someone wants to say a comment, mention something as regards to what we have been sharing. But apart from that, I want to thank you for your attendance this morning. And I hope we can meet. Okay, we see Quizera. Quizera has a hand up. Quizera, what do you have to say? Okay, Quizera just put up the hand and did not say anything. Can you say something, Mr. Quizera? If it's a Mr. Just unmute your mic and say what you want to say. Okay, Flavia N. Please, go ahead.
Okay. Thank you so much, Coach, for the session. My question is, on a typical day, like I wake up in the morning and I want to place a trade. And on my trading view, I see I'm already in the demand zone and all the indicators show that I'm good to go. So how do I tell what are those small basics I should start from and say, today I think the market is not good, so I'm not going to overexpose, or today the market is really, really good, I should overexpose. That is what I'm wondering, what should guide me, like on a typical day, to follow.
Rule of thumb, you're going to learn how to underexpose. That is where we all start from, before you can understand how to gauge the market. The first rule of thumb is, because as a trader, you need to protect your capital. You're going to learn how to underexpose and be okay with underexposing. You get it? Because you do not know when to overexpose and when to underexpose. So the first thing where we start from, all of us, is to manage our risk through underexposure. So if you do not understand and you don't know how to do that, your risk management default is going to be underexposure. Now, some of the things that you can look at to gauge how much exposure, now that is something that is going to come with experience, and that is something that is going to come with the knowledge that you've been able to gather about the market. Things like being able to judge sentiment. Things like being able to judge sentiment is something that I cannot tell you black and white. No. Sentiments can be judged using different data, let's see, risk on, risk off. Things that we use to judge sentiment can be a range of risk data. You get it? A range of risk data, rather a range of indicators, data that we can use. Now, for example, when I'm judging going to get, there is this risk on risk off indicator that I can use. Generally, in the market, financial market, we are on a risk on mode. As you can see, it is in 78. We are on a risk on mode. This one gives me the entire traditional financial market sentiment. After yesterday's news, we basically went risk on. You can see that the Australian dollar JPY risk on, Bitcoin USD risk on. It is just crossing into the risk on area. It has previously been under in this gray area, but we are just crossing into the risk on area. However, we are seeing copper, Japani, Nasdaq, SPX 500, US dollar volatility index, gold. Oh, gold is risk off. Gold is risk off, as we can see, but the rest of the other financial assets are extremely risk on. Now, you need to understand the relationship between the financial markets that we are trading and the crypto markets, and how they do it, how they interact, and how they interplay with each other. When we see many of these Nasdaq, SPX, they are risk on, usually we are not going to be outperforming them in crypto. That is just one thing that I've been able to notice. But as they come off of risk, when they go risk off, basically cryptos are going to be entering the risk on area. So one of the areas that we can look, there is a lot of data that we can use to engage, but one of the data indicators that we can use is the risk on risk off indicator. And we can see Bitcoin is already has crossed my green line. It is in the 65. When Bitcoin is risk on, basically the market is going to be able to give me some good profits. Now, I'm not going to go fully in when I have Bitcoin just on the line, on the fence. I'm going to go fully in when Bitcoin is fully inside the what? Inside the risk on area. You get it? I'm going to be highly convicted on a trade. I'm going to be highly convicted on a setup to do what I want it to do when Bitcoin is high in the what? In the risk on area. Now, that is one area that you can use to gauge. There are other areas like coin market cap, and I come here, fear and greed index. When we studied yesterday, the fear and greed index was around 40 something, 46, 47, around that area. Today we can see the fear and greed index is in the neutral zone, the 50 area. So neutral, I am confident that trades are going to be green, but not big moves. They're going to make big moves, except a few tokens. But generally, the market is not going to be making what? Extremely, extremely big moves. Okay? There are other things that I use to gauge. The altcoin season index. It is high up here. You get it? It's at 66. It has moved, right? I'm going to use market dominance. I'm looking at Bitcoin. Bitcoin trading at 57% basically is positive for altcoins. Get it? Bitcoin not rising above 58, 15. According to market dominance, Bitcoin has slightly gone up in terms of dominance from the previous time we were here. It has slightly risen. So when we are gauging what we call sentimental analysis, because when we are doing trading, we do fundamental. Now, sentimental analysis is what you're going to need to be able to gauge how much risk I enter with in the market. Now, if you do not know, if you're not sure that you can pull off your sentimental very well, the default area where you should be trading as a trader should be the underexposure part. You get it? Do not tamper with overexposing and underexposing. You should be in the underexposure part. You should be comfortable with that, and you should understand risk management. And now, as you develop your skill of being able to gauge the market, you can now try to get high conviction on certain trades. For example, I can show you a trade on Ethereum right here that I started with, and you will notice that many of the times when I come and I start, I'm going to start with looking at Bitcoin. How is it performing? BTC USDT. Now, when we look at Bitcoin, as we started off this session, I started off and I told you Bitcoin reclaimed the $115 area. Okay? Bitcoin has been ranging within this very important area. You get it? Bitcoin came down, tapped the area, and exited the area. However, I was waiting for external market structure for Bitcoin to do a change of character, for me to be convicted that probably trades are going to now start going in the upward direction. For me, why do I want to do that? I want to do that to know when I can actually expose a little more capital into the market. Otherwise, on normal occasions, I'm going to underexpose. But now, Bitcoin has given me the external structure. It has given me a change of character. Okay, I thought about market structure, I think a few weeks ago. So I hope you understand when I say external structure, change of character. Now, when we look at Bitcoin, it has basically been in an ongoing downward trend until just yesterday, when Bitcoin gave us a change of character in its external structure. Was it yesterday? Was it on Wednesday? Yes. On Wednesday, Bitcoin gave us a closure above the previous known range high. So it gave us external structure, and we are seeing Bitcoin is on the rise, as you can see. So now Bitcoin has confirmed that it is now establishing an upward trend. If I want to take a trade on Bitcoin, I would wait for a retracement, maybe in a fair value gap or a common area a point of interest that I want, and then I could probably take another trade, a high conviction trade on Bitcoin rising and maybe reclaiming its previous high. Now, when Bitcoin is bullish, for example, when Bitcoin is bullish, I would expect the market to do what? To be bullish as well. You get it? Now, when we go to daily closures of Bitcoin, we can see Bitcoin closed with a bullish candle on Wednesday, closed with a bullish candle on Thursday. Now, that is basically bias. Bitcoin is biased in a bullish what? In a bullish direction. I would expect the market to follow suit. When Bitcoin is bullish in terms of its bias, I expect the market to follow suit. Now, you do not need all of this analysis to be able to make money every day. You understand? But the more information you get in the market, the better quality your trades are going to turn out to be. The better information. Now, for me, why am I using this? Why I'm using this is to gauge how much risk I enter into my trade on that given day. When Bitcoin gives me a bias that is bearish, I'm going to be a little more conservative. It doesn't mean that I'm not going to trade. I'm going to be a little more conservative. Now, some of you have seen this in spot trading. Sometimes you place spot trades and they exit in a day. Sometimes you place them, they exit in 2 days. Sometimes you place them and they take 3 weeks before they exit. Doesn't mean that it was a wrong trade. It just basically means at that moment when you place that trade, the market conditions were in a certain way that took on the results that you're seeing in your what? In your spot trade. You get it? So you realize that some of us, certain times we don't even trade. A day comes and I don't trade. A week comes and I don't place a single trade. I'm not trying to tell you to do the same. Probably you do not have the capital to allow you the freedom to not trade certain days. You probably have to trade continuously. However, why am I showing you this? I'm showing you this so that you can understand why certain trades will take longer and some will take lesser time in the market. It is basically some of this other information that you're probably missing out. So we can see on Wednesday, Bitcoin was bullish. On Thursday, Bitcoin closed bullish, a bullish candle. So basically, today I would expect the market, it has already taken out the high of the previous day, and probably I expect the market to be really bullish. But other factors can play in on where the Bitcoin is going to go, because Bitcoin is basically our North Star. It is what we look at. Now, I took a trade on Ethereum, which I started with, and I told you my expectations in the market. ETHUSDT.p ETHUSDT, sorry, ETHUSDT.p. Great. There we go. So I took a trade on Ethereum, and as you can see, it was triggered last night because I was looking at how Ethereum has been consolidating, and I expected. Now, for me, if you know entries and all, you'll find that you with my trades, you'll find that I don't follow so much of the entries, confirmation, and everything, because I use other methods of confirmation, other high conviction methods of confirmation. But you realize that if if you want to take a trade maybe on Ethereum now, you realize that Ethereum has finally given us a structural change of character. On this high, you can see it is closing with a candle body here. This candle has not yet closed because this is a daily candle. But when we go on lower time frames, like on the 4 hour, you're going to realize that we have a change in character on the currently printing candle. Now, when this candle prints and remains bullish, because it has 30 minutes remaining on this 4 hour candle, when you draw this line here straight and meet the candle, and it meets the candle body, that would be a confirmed change of character on what? On Ethereum. So you could wait for probably a retracement to one imbalance area, and you could join me on this kind of trade. You get it? So you find that because I assessed and I could tell that Bitcoin has definitely gone bullish, I could take a mid-risk. Now, this is not a high conviction trade. This is a mid-risk trade. A mid-risk on Ethereum, and I'm swinging it all the way to around 10 to 11%. I'm probably aiming for the previous high. Now, if the conditions do not change throughout the weekend, if the conditions don't change, I expect my Ethereum trade to rise up at least a good 10% from my entry. And I would maybe take a good profit from that. Otherwise, if conditions change, I might come and reassess this trade because it's a swing. You get it? It's a swing, and I can choose to take a small profit and close the trade instead. Why? Because this was not a high conviction trade. This is basically a low confirmation trade. I did not confirm change of character. I use other trade entry procedures or ideas to come into this trade. So to basically, in simple terms, answer the question, when do I change? When do I gauge the market? You're going to have to learn. You understand? You're going to have to learn how to analyze sentiment, what we call sentimental analysis. Sentimental analysis is going to go hand in hand with fundamental analysis. And those two will support your technical analysis. You get it? Now, your technical analysis can get you a 3%, a 5%. Fundamental analysis will definitely get you a 15% from the market. Now, if you can add to that mix sentimental analysis, you'll be able to catch trades as high as 20%. If you have those three aligned, you have the potential to take bigger from the market or to stay longer in the market with a good profit. All right, guys, I have pushed way beyond what we should, but I want to thank you for those of you who are still here. I want to thank you so much. Yes, please.
Sorry for the interjection. I'm kindly requesting you. From yesterday's lesson, you are talking about Ethereum and Ethereum dominance against BTC dominance. I kindly ask you just throw some light, at least in 1 minute of your time. Just do me a favor and show us by chat Ethereum and
let me ask my coach if I am allowed to do that. If he says yes, and we can go ahead. Coach Mardi, do you allow us to go through that in the shortest time period possible? Because we have over pushed now.
Maybe we can use maybe like around 5 to 10. It is okay. Okay,
thank you so much. All right, Prince, I'm going to throw in some more light on that. Just as my final remarks on the previous presentation and Flavia's question, I said you're going to have to take time to learn fundamental analysis and sentimental analysis and try to to join those two. Okay, and if you continuously come for these sessions, we really talk about these things. Okay, and you can also come in and ask your question. I usually come and I ask people questions to present their questions at the start of the session. Okay, going to Prince's question, you talked about Ethereum dominance. Can you ask your question again? As I
Okay, my question is, yesterday you happened to talk about the BTC dominance as a major factor when it comes to market analysis and what have you. So, in your words, you said that if we are to start the out season, one of the indicators we must see Ethereum taking over the BTC dominance. So I wanted you to throw more light on that, such that it sticks to our mind very well.
Okay. All right. I understand the question. Right, I understand the question. So it's not basically in analysis, daily analysis, but in cycle of bullish market analysis. You get it? Overall bullish market analysis. In a bullish market, we have cycles. Or in a bull market, we have cycles in that market. Rather, the bullish cycle that we are in follows certain things that we have seen at least from previous cycles. Now, not all cycles are going to play out the same way, but before we can anticipate what we do not know, we have a starting point. We can anticipate what we know. You get it? We can anticipate what we know. Now, from the previous cycle, I did this analysis. I think I was teaching it to some of my students somewhere there. And I showed them that on 29th March 2021 is the day Ethereum goes parabolic in terms of dominance. If you do not know the Ethereum dominance chart, you're going to come to your trading view, type ETH.D. Okay? It is going to come and it is going to be provided by CryptoCap. It is a trading view platform. It is market cap Ethereum dominance. What does Ethereum dominance do? Ethereum dominance measures for us how much capital entirely in the entire crypto market is dominated by Ethereum. Let me explain that to someone who is seeing it for the first time. When we see the total market capitalization of the crypto market, it is $4 trillion. Now, when we gauge dominance of a certain token or coin, we're basically looking at, off of this cake of 4 trillion, how much does Ethereum contribute? Okay, so we see Bitcoin is dominating the entire $4 trillion market cap of the cryptocurrency market by 57%. Ethereum, on the other hand, is dominated by a simple 13%. You get it? So that means that off of 4 trillion, Ethereum has 13%. 13% of the capital invested in the crypto market is in Ethereum, and 57% of the market invested in the crypto market is in Bitcoin. You get it? Now, when we are gauging for out season, some of the things that we want to look at previously that have happened, some of the things that we can gauge, that we can follow, and the other traders are following, is for out season, we want to see the market dominance of Bitcoin going down. And one of the things that show us that the out season is imminent, it is inevitable, it is coming. There is no doubt about that. Bitcoin dominance left the highs of 60%. You get it? It left the highs of 60%. I don't know. I should get it maybe on the chart here. Let us get BTC.D. I told you, you're going to go to Trading View and you're going to search BTC.D and it will give you the Bitcoin dominance chart. Okay. Okay, I think I'm looking at the same data here. So you see, Bitcoin dominance was on the rise in June, and that is when it stopped rising. Bitcoin dominance was at its highest in February 2025. The recent range that it went as high as that in 2025, and it was as high as 64%. We see the highest point Bitcoin dominance reached is 66%, and that is in June 2025, this very year. But the very, very week it produced its high, it started melting down. You get it? It was trading within a channel and it started melting down. And the moment it crossed below the channel, we see a huge meltdown of a 5% drop from a high of 64 to a close of 60. You get it? A high of 64 and a close of 60. That was a mega meltdown. Bitcoin dominance. Okay? Now, for out season, I want to see Bitcoin dominance leaving the 60 area. Okay? For other coins on the market to pump healthily, I want to see the capital that is concentrated in Bitcoin reducing to as low as 54% dominance of the entire crypto market cap. What does that mean? Psychologically, It means that traders who have been investing in Bitcoin have now withdrawn their money from Bitcoin, and they are now looking for smaller assets that have the potential to give them bigger gains. That is why I look at Bitcoin dominance and I want to see it melting down to as low as 58. Around that area, I am starting to enter my outs. You get it? And 54, around that area, I want to exit my outs. The moment we go to 48, blow off the top, you're seeing 200x, 300x in very many tokens. You get it? So I want to see the money that has been hugely concentrated in Bitcoin, leaving Bitcoin and flowing into all these other coins on the market. That is alt season. Because big investors are now taking profit from Bitcoin. As big investors take profit from Bitcoin, they're going to look for some small coins there to put their money in. And now as they rush to pour their money in tiny tokens, you, who is a small investor, who is a small cap investor, who has been counting on alt season, you have a higher chance of maybe making 100x, 200x, 300x. Now, the buying pressure that comes from the big investors who have taken profit from Bitcoin, for example, and pouring their money into this small coin, and the retail buying pressure. By retail, I mean everyone who didn't know about cryptocurrency, who is just seeing it on the news and probably saw Coach MRD's TikTok video, and they're like, now I also want to make Royalty. I also want to start trading Royalty. That is called retail FOMO. Retail FOMO is basically the people who are definitely not about cryptocurrencies. They did not know anything about crypto, but because Coach MRD shared signals, rather profits of $30, $100, $1,000, and they are consistent coming through, and then they are seeing Coach MRD, they're seeing Tim Pembo, they're seeing another person, they're like, crypto is making a lot of money. Now retail comes in with a lot of speed, and they come in with a lot of money. Okay, they FOMO. Now I'm not talking about only the Royalty traders, I'm talking about the entire world. When crypto goes over the news and people are thinking the bull run is at its peak, retail comes in with FOMO. Now retail brings in a lot of liquidity, but also the big investors bring in a lot of liquidity. Now, those two liquidity levels, when they join together, they cause the out season. They cause the pump in the what? In the altcoins. Okay? Now, some of the indicators I can use is Bitcoin dominance. I want to see Bitcoin dominance drop. You get it? I want to see it drop to go as low as 56. That is when I want to start entering my coins. 54, I want to be locked in those coins that I want to trade. Now, the lower it goes, I want to start exiting the market before I become exit liquidity. You get it? The lower it goes, I want to exit the market. Now, previously, we can see what happened, right? This yellow area is the same yellow area you saw on Ethereum. Okay? Bitcoin dominance went as high as 73%. It ranged around 64% previous cycle. You see, we are looking at February 2021. Okay, now we see around this area, March 2021, it was as high as 62, and then it started melting. You get it? It started melting down. It melted down to as low as 40%, and it went down into a range. It staggered in a range. You see it? It staggered in a range before it finally broke the range and it started rising on the rise that we see today. Okay, so we see Bitcoin dominance rose up to the level at which it broke down from the previous cycle. It broke down from the same level, and we are seeing Bitcoin dominance breaking down from the same level. I want to see Bitcoin dominance go down as low as, now I do not care if Bitcoin dominance doesn't reach the lows of 40%, but it is possible. You get it? But I don't care if it doesn't reach there. I want Bitcoin dominance to get to as low as 56, 54, maybe break into the 40s, enter that area. Now, that one is core out season. You see this yellow marking? That yellow marking is basically that very time Ethereum dominance is rising. ETH.D. Yes, ETH.D. Now, the same, I marked out this chart in the same area. So you saw that yellow area where Bitcoin started melting down. Ethereum, it is the same yellow area that we are having here on Ethereum dominance. Ethereum dominance started outperforming Bitcoin dominance and it rose. Now, this 16% level is what I said. For alt season, I want to see Ethereum dominance rise as high as 16%. You get it? That is when I'm going to confirm that alt season is finally here. But that confirmation is not alone. It is not enough alone. I use 4 confirmations. One of them, I want to see Ethereum dominance rise as high as 16%. I want to see Bitcoin dominance fall as low as 54%. You get it? I want to see it fall below 56, go down 55, and 54 is the sweetest spot. But by 54%, most of the coins have moved. Most of them have already done maybe 100%, maybe a 70%. But when we talk of alt season, we are not talking of coins doing 100%. We are talking of coins doing 1,000%, 10,000%, 20, 30,000%. You get it? Now, if you're waiting for that to happen, you're going to get tokens maybe in their last 1,000%, and you may trade there in their last 1,000%. But for alt season, you need to position yourself and you need to track the market and see where it's going and get in before the what? Before the buyers come in. Because when they come in, you are at a very, very likely stage that you're going to buy late. Okay? But one of the indicators that I'm looking at, I want to see Ethereum dominance rise as Bitcoin dominance falls. Okay? Now, a very, very straightforward way of looking at that is coming to CoinMarketCap and looking at this area. Okay? Bitcoin dominance is at 57, Ethereum is at 13%. What we see is Ethereum dominance is rising. It has been rising since Ethereum started doing what? Pushing up. You see? Since Ethereum started making all-time highs, Ethereum dominance has been rising. And you can see it did a retracement and it is now going back. I want to see Ethereum dominance at 16%. At 16%, most of the tokens have already moved. But we still have enough juice. At least it is a confirmation that heavy capital could flow in. You get it? At 16%, alt season could be triggered and the spark could happen. But the chart does not necessarily show me what is going to happen. I want to look at fundamentals to confirm alt season. I want to look at major big fundamentals. Last time when I talked, yesterday when I talked about things like rate cuts. Yesterday we got positive news towards what? Towards rate cuts. Okay, that is why we're seeing the relief in the market. Some greens that are happening in the what? In the market. So for alt season, I want to see Ethereum moving to 16% and above. Currently, Ethereum sitting at 13% is not enough fuel for what? For alt season. Yes, certain coins are moving. We've seen MYX has already done a 300x. You get it? Certain coins are moving. We've seen small caps doing 60, 70%. I think the other day I traded OG did the 60%. WorldCoin did a 60% rise in the market. So certain coins are starting to move. But what we call alt season to be triggered, my confirmations, I want to see at least Ethereum coming and dominating the market to a level as high as 16%. We can compare this on previous data, but I want you to remember that previous data does not guarantee future data. However, in the crypto market, there is nothing else we have. We just have the previous data. You get it? So off of the previous data, we see Ethereum came. I don't want to see Ethereum doing this. Come, play around 16% and drop. No. I want to see it sustaining this level and continuing. That is what you're seeing here. Ethereum came, pushed through the level and just continued. You get it? Now, those are signs of what? Of some good alt season. So we see Ethereum ranged from up above this side. You get it? When we go to Bitcoin, BTC.D, when you go to BTC.D, the same period of time is what I labeled for you here. Bitcoin broke down, it went down, and it ranged from down this side. You get it? So I think the relationship that you were looking for, the one that you want to see between Ethereum dominance and Bitcoin dominance, has been fairly explained to you and demonstrated. You get it? As Ethereum is rising, I've shown you the yellow marks. The yellow mark on Ethereum when it broke out and it went up is the same yellow mark you're seeing here on Bitcoin when it broke down and went. So the same ranging period that you see on Bitcoin here is the same ranging period that you saw on Ethereum that I highlighted the other side. So what is the relationship? The relationship is I want to see Ethereum trading in terms of dominance going above 16%, probably 17, probably 18. For what? For alt season. You get it? And I want to see Bitcoin falling as low as 54% and breaking those lows, continuing to fall and ranging it down. You get it? What does this mean in the market? In the market, it basically means investors have taken out money out of Bitcoin. They are now looking for lower, cheaper coins to buy to make some more money in an out season. So when investors offload their capital, take profit in Bitcoin, because as a cycle is, I told you, Bitcoin rallies before, and then Ethereum follows the rally. Now, why do we see Bitcoin going down and Ethereum rising? It's basically because when investors make money in Bitcoin, previously we've seen capital flows directly from Bitcoin and flows into Ethereum. That is why we want to see Bitcoin's dominance falling and Ethereum's dominance rising. You get it? But there are levels that I'm going to look at that will confirm for me that probably an out season is almost here. But before I see those levels, out season is still something that you should be expecting. Now, if I'm expecting it, doesn't mean that it is not going to come. But also, when I see coins rallying, doesn't mean that it has started. You get it? Some of the things I'm looking for to confirm is Bitcoin dominance falling as low as 54% and continuing to fall. Ethereum dominance rising as high as 16% and continuing to rise. Now, Ethereum dominance will rise, but then out season, when out season comes, definitely Ethereum dominance has to go down. Why? Because capital has to still leave Ethereum and flow into all those other coins that you want to trade. You get it? So Ethereum dominance definitely at a certain point reaches and it falls. As you can see here, ETH.D. Yes, ETH.D. So when we get here, we see Ethereum really crossed my 16% level and it went as high as 19. You get it? It went as high as 19. But you see this breakdown? The one you see here, the breakdown in Ethereum dominance, this is when out season happened. It was in June 2022. You get it? In June 2022. And if you go and check, on your chart, pick a coin that performed well in the previous out season. Pick a coin like Pepe, Dogecoin. Pick a coin like pick those ones. I won't give you very many examples. Pick those ones. Go and see how they perform. Pick LTC. Pick coins that have been here for a while. Go and check between April 2022 and June 2022. How did they perform? Were they on a downtrend? Or they on an uptrend? Confirm that. Come in the evening. Tell me what you saw. Okay? Tell me what you saw. But this breakdown, this meltdown that you're seeing here is basically the area within which out season happened. Okay? That is what I saw on Ethereum. So Ethereum really went high. It went high. But for out season, I want to see Ethereum dominance also doing what? Breaking down and falling. Why? Because capital, after people taking profit out of Ethereum has made all-time highs. Ethereum definitely then, investors take profit out of Ethereum. So that means its dominance has to go down, and then I see true out season. You get it? True capital flow into those tokens that are down there, that are about to make a 10x, a 50x, 100x. But if you're just watching these things, you're looking at them and waiting. Okay, let me see when it drops. You're very likely going to get in. This analysis. We do this analysis so that we can time and get in a bit earlier. Okay, I got an interruption, but I think it is also to give me a reminder that we have went so far with this call. Otherwise, thank you for that question. I hope you've gotten some more clarity on that. I think I need to go now because I'm now getting calls. Thank you. Let's meet again in the evening. We shall be looking at trade settings and more of what we've been discussing. Other than that, I wish you a profitable day. See you.